Mr. Mhango, I beg your pardon, has been listening into the governor as well. I mean, we were expecting these figures, 50% basis points, as some have been arguing that the interest rate has been below the target. Perhaps the MPC could have pushed that figure a bit further. Obviously, he's being precautious with that. Your reaction?
Well, I think it's a positive move, which we're expecting. You have to be cautious in this approach, especially in the global scenario which we operate in as a country. The economies are all interlinked from the trade side point, but from the inflationary point of view, the new policy direction which America might be taking under the new president, all those factors have to be taken into consideration. So realistically, I think it's quite a bold, positive move, both on the aspect that what the country is facing currently. He talked about the elements of growth patterns in the economy. Now, he talked about the underlying risks that exist from the point of view of geopolitical issues, fuel prices, food prices. And I think this is what we discussed earlier on before the announcement itself. So I think it bodes well for the economy at this stage based on the current environment. So caution on the way it's going to be done, I think it's a positive move for the economy.
Yes, but looking at South Africa, obviously we're in a global community with what's happening in the United States. The governor wouldn't be drawn into commenting on Trump's recent re-election, but some of his policies looking outwards in terms of the massive deportation that he's been talking about and how that is likely to affect the labor market. How does that translate to what we're experiencing here in South Africa in terms of figures?
Well, as long as what happens that in that kind of environment, obviously it might have implications towards the inflationary direction from the American perspective. When you take out some of the workers in the economy, obviously what transpires that it makes the labor environment much more expensive for the producers. And when you bring in the element of restrictive measures from the trade perspective, I know Trump has been talking about increasing the tariffs to protect the American economy or American producers. All those elements obviously are inflationary in nature. So when inflation in the U.S. starts going up, obviously there will be reaction on the point of view of the Federal Reserve Bank in the U.S. in terms of taking the direction where interest rates must start now taking an upward direction. And I think we've already observed some elements of inflationary pressures coming in back in the American economy. I mentioned earlier on previous number was 2.2%. Now it's sitting at 2.6%. So it tells you that those dynamics are still at play. Energy prices will always remain a major underlying factors in a global world. So you bring that, and then obviously it has got implications towards the interest rate direction on the South African perspective. Remember, investors always compare element of which country has got the high real interest rates. So high interest rates, real interest rates mean interest rates minus inflation. So currently, I think we're doing well in that perspective.
And in terms of the rand volatility, just before, as we're listening to him, we're talking about how the rand normally reacts immediately when interest rates are announced. I think just yesterday or earlier on, it was trading around 18. How do you think it has fared within the last couple of minutes?
I think the market did factor in that 25 basis point. It was a widely observed decision from several analysts, including ourselves. And I think the fact that even the Reserve Bank itself took an unanimous decision around it, it shows that there was no debate around it. And I think the governor even put it openly to say there was not even a discussion around which direction the interest rates should take place. Because in normal cases, what you find that some others in the MPC will say 50 basis points, others will say 25 basis points. So obviously it made the decision even much more easier. And also I think if you observe the way the MPC statement has been articulated, it was set on point, looking at the real issues of what we're facing, look at the risk issues what we're facing in the economy, looking at the broader perspective in terms of what's going on around the globe. So it was set on point, quite assertive in approach, but also cautious in approach.
Yes, we did mention that it was a unanimous decision from the MPC. What can we expect going forward in terms of these interest rates decisions? What issues do you think are likely to shape the next decision?
Well, I think as he pointed out, I also want to align to his message to say we have to be taking this on a cautious approach, on a meeting by meeting basis. So what that he means thereby is that between now and the next meeting, there could be other developments that might shape a different direction in terms of how interest rates will be happening going forward. But for now, the projection is that the only time interest rates will be maybe above 4.5%, which is the medium-term target, is actually after May onwards. So That's the current setup. But anything can happen in this global economy. You know, there's always this geopolitical pressure that exists. You know, we still got the Ukraine war. We still got issues that are happening with how the Russians are positioning themselves against the Ukrainians in that war. So all those dynamics obviously come into play in terms of even the global oil prices, the food prices, and so forth. So those key elements have a strong inflationary outlook towards how the global economy will be moving in terms of inflation perspective. So those things will all be taken into consideration. So I will also take to say, for now, if the situation remains the same, we might even end up having maybe another interest rate cut of 25 basis point in January, but based on the current setup. But all that will depend between now and the next meeting.
It'd certainly be good news having some money put back in the pockets of the consumers. The prime lending rate changed by 0.25% from 11.50 to 11.25. You know, very little is spoken about that, but that's essentially the money that the banks use when you're going to borrow money for your car or either for your house.
Yeah, so I think that's it's positive news in the point of view of how you look at interest rates with regard to the installments, repayment, you know, bonds, cars, and so forth. It's positive news. But I think we must also look at it from the different perspective to say, no, look here now, it's much more even advisable now to put money in the bank, because now the inflation that erodes your money in the bank is actually on the lower side. So that's also a positive news in this domestic economy.
Yes. When we spoke to my colleague earlier, Tumi, as she was speaking to her guest, they were mentioning that, you know, owners, the market will always be for the owners. Is it a buyer's market? Is it a seller's market? How do you see that shaping in terms of the property industry?
Well, I think we also have to be a bit more careful in terms of how we present those facts, because you know, you can talk about the buyers as well as the sellers market, but realistically, I think at the end of the day, it's about affordability. Are you going to be able to pass the test in terms of affordability test at the banks? That's what matters. So we still got issues of high inflation in the other segments of the product range of the inflation basket, which I think are still creating pressure on the consumers. You know, oil prices are still very high, fuel prices, you look at petrol or diesel, food prices are also still on the higher side, even though the food component of inflation is actually on the lower side. As I mentioned earlier on, to say that, no, even though food prices have gone by down, I mean, it's price-wise 3.6%, it does not mean that the price of bread has gone down. So those are some of the dynamics which will always have to be played from the consumer perspective on a one-on-one basis to say, okay, now, how do you see this from your own perspective? Yes. So positive news, yes, but I can't define to say this is a buyer's or seller's market at this stage.
It always comes down to bread and butter issues at the end of the day. Thank you so much for your insights. We certainly appreciate it. Mr. Chifipa Mhango is a chief economist, and he stayed with us along to just give us his insights. It was quite interesting picking your brain, so thank you so much for coming through.